what do you think is the most exciting new opportunity that's sprung up?
Sure. I mean, look, actually, if you reflect back and zoom a little bit further back and think about the Great Recession kicking off in 2008, I actually think there's been an erosion of trust in financial institutions among consumers really starting then and actually continuing to progress. And SVB is actually kind of just the latest shock to the system from a consumer perspective. Certainly, as you think about what it does from a capital perspective, I think between consumers and the capital market, it's really created an opportunity for flight to quality. And so for us, as a platform that's really helping consumers kind of in a very measured, thoughtful way build economic security over time, it's created a tremendous opportunity. But I also think in terms of where capital is being attracted today, you're going to see sort of a shakeout in the market and kind of those companies with scale, product fit to market, and real path to profitability survive and thrive.
So do you find as a relatively small company in a landscape that's now populated by even stronger giants that you have an opportunity to take more customers?
I think that opportunity always exists when you found resonance with a consumer segment. But what I would say is that one of the things that was true, not just pre-SVB, but kind of pre the toppiness and excitement that the market has had for the last couple of years, is that there were maybe a lot of companies built that were probably more features than companies. What we look at, and I will just give a shameless plug for Alloy, who's a great partner of ours on our platform, companies that really have created like holistic value and a real underlying platform, not just a feature. Those are the companies that will kind of get through these dislocations. And so I do think that creates an opportunity to gather market share when other people are struggling kind of more internally focused.
And Laura, we spoke a little bit earlier about the conflict between verifying your customer and at the same time offering more opportunity for people who may not have access to credit to get loans. And it plays into this lack of trust that we're seeing now in the financial system, and at the same time, the wariness that people in finance need to have about their customers to make sure that they're not fraudulent or money launderers. How are you balancing that tension at Alloy?
Yeah, I think it's not an easy job for anyone, and it's not intuitive, particularly since we've really only moved to digital financial services in the last decade, right, where everything was done in person. This was an easier, albeit worse and kind of more expensive job, but it was someone sitting across from you. You can ask for their driver's license. It's probably who they are. Now, with digital channels, you have a much shorter time to actually get someone in. I know my own experience, like if I'm sitting in an app for even 15 seconds, I'm like, all right, I'm out of here.
Yeah.
You have a very short window. You have incredible fraud vectors. But the biggest opportunity cost, I think right now with fraud in particular, is not just the kind of dollar cost of fraud losses, which is massive, but it's the opportunity cost of saying no to good customers. And that's what we see a lot of, is like if you don't have the right nuanced perspective, if you're not gathering all the data that you should be looking at a whole host of data. You should be looking at data throughout the customer lifecycle too, so you have like a wider kind of perspective. If you're not doing that, you're probably saying no to a lot of good customers, and so that's a problem as a business. It's also a problem for consumers, and I think that's where the access part becomes really tricky. At the same time, we have scams that are kind of far and wide right now, getting way more sophisticated, and we want to protect consumers. But it's really hard to do that and to kind of balance that. So you have to have more data, you have to have the right decisioning layer to make the best types of decisions. You have to be able to test it, you have to be able to explain it. You have regulators and auditors who have to explain everything to. And so this has to be crystal clear, how you made the decision, why it wasn't biased. That is a whole job or a set of jobs into itself. And so I think we're dealing with something that is much bigger than it was in a face-to-face world.
I'm glad you mentioned the digitization of finance, which has been a sweeping phenomenon. How do you view that, and can you put AI into that context? And what are your realistic, not your dream or moonshot expectations regarding AI?
I hate to sound, I'm not an AI Debbie Downer. I think it's incredible. I think the potential, though, is not limited by technology. It's limited by what I'm sort of calling like explainability of it. If we can't explain what we're doing, there's almost no chance that auditors, regulators, bank partners are going to be able to accept it, and therefore that adoption can be far and wide. And so I think that's one of the limiting factors today. The other one is infrastructure. So in order to adopt the latest and greatest AI models, be able to like use generative AI in really interesting use cases, you have to be able to physically implement it. So say if you're a bank, it's incredibly challenging when you have siloed data lakes, you have systems that don't talk to each other, you have a fraud person over here and a compliance person over here who have totally different goals and don't even work together. It's incredibly challenging, I think, to actually make this stuff work. And so I worry less about the sort of pure power of AI, and I worry much more about the kind of tangible, functional, practical aspects of it. The second thing I think about is just, we're in this game of cat and mouse with fraudsters. I think the power of AI plays more in their favor right now. The incredible amounts of sort of deep fakes. I was reading about the $243,000 scam perpetrated with voice technology, right, where they impersonated the CEO and got just over voice. But we all think we know we're not simpletons. We know we can deal with the kind of Prince of Nigeria scams. This is a completely different level where, in some cases, you're actually seeing the of face and a voice that are fake. So I just think we're not able to keep up.
Look, I think I agree with everything Laura said. I would just like, when I reflect on this, I just feel like we're kind of at the Wright Brothers stage of AI, and that like the promise is there. What it will unfold as over the next couple of years, depending on the use cases we come up with, how we can explain it, how regulators act around it, there are going to be so many influences. Anyone who tells you they know how it's going to fold is either lying to themselves or to you.
Yeah, I think that's a great observation. And I was thinking when you were speaking, Laura, how so many of the things you were saying could be applied to crypto as well. And I was wondering, Liza, I know that you have more expertise in the world of crypto.
I'm very proud of us for making it almost halfway through before saying crypto, like 2 years ago.
It's because AI replaced crypto as the go-to hot term.
Look, this is how I think about it. The peaks of excitement and the troughs of disillusionment cycles are happening faster and faster, and certainly like with the crypto world, we've been through multiple cycles like that. The way I kind of think about it is, do we think cryptocurrency is an enduring asset class? Yes, I do, and at Stash we do, and therefore we make it available, but on a highly curated basis.
Can I just interrupt you and ask you if you could briefly sketch out why you think it's an enduring asset class?
I will try and do it really briefly and not sound too wonky.
Very briefly.
But TLDR, I think if you believe that there is a tendency toward tokenization and decentralization of the internet and therefore the economic system around it, currencies that enable that are actually helpful to the ecosystem. However, those that have had sort of enduring longevity already, like an Ethereum, like a Bitcoin, and have more stability in them, I think, at least as I sit here today, and from our perspective at Stash, look to us like things that will continue to be relevant for what we refer to as the crypto-curious class among consumers. And so having those things in a well-diversified, risk-appropriate portfolio is a good and healthy thing, in the same way that exposure to companies that are focused on developing AI technology is a good thing to have appropriate exposure to in a diversified portfolio, but you wouldn't want to have all AI companies or all crypto in the same way you wouldn't want to have all automotive in any portfolio. And so that's kind of the way I think about it as a space. It's also a place where the regulatory environment is going to play a super important role in how the landscape develops.
Yeah, I was just going to ask you about BlackRock's application for a Bitcoin ETF. And it's that sudden entrance of a major financial institution into what has been an unregulated space.
Yeah.
Do you think that's a game changer?
I think it could be a game changer. Like, first and foremost, I think I am not qualified to offer investment advice. I just want to say that really loudly, both for the regulators out there and because my comms person in the background will kill me if I don't say that. But when you think about like the best way for an average retail investor to get exposure to any sector, really it's through an ETF. And so BlackRock, one of the largest, if not the largest asset managers in the world, pulling together sort of a market basket that creates measured appropriate exposure is a good way to actually bring the asset class into kind of common access and measured, highly regulated view of the world. And certainly, if anyone has a shot at doing this, it would certainly be BlackRock. I feel like I need to disclose I worked there once upon a time, but I don't hold any stock in BlackRock.
Well, you also have experience having worked at Citigroup, which is another large
Well, you're really doing my
entity.
greatest hits today. Thanks.
And I know that I use a digital currency right now with ease and frequency every day, and it's called my Visa card.
Yep.
And I'm wondering how you see that sort of digitization of money. Is there further to evolve in the regular consumer experience with the digital form of money?
Oh, I mean, look, this is a very simple, obvious example, and it's even more prevalent outside the US than inside the US. We were talking about this backstage. I spent the weekend in Toronto with my 21-year-old daughter. Hello, Sarah, you're in the audience. And like, she never pulls out actually a credit card to pay for anything. She pays with her phone.
Right.
And like, I get looked at like a crazy person when I actually pull out a plastic in any Starbucks because people don't use those there anymore. And I think generationally we see that shift happening all the time.
Yeah.
What form factor that will take in the future? I don't know. Like soon, I think actually I've seen a bunch of trials on this. Like maybe it's just in your watch in the future. Maybe you don't even need to tap your phone. So I do think that's the continuation of this decentralization and tokenization of the economy, which is if all you need is to be able to move zeros and ones to move money, and no one does this better than Alloy, then like our imagination is really the only limiting factor on like what secure form factor that kind of transfer of zeros and ones could end up taking. And I do think consumers look for convenience, speed, security, and privacy protection.
Yeah, and to get back to that, Alloy is obviously at the cutting edge of those security questions and the privacy questions as we continue to move further forward towards that world where it's even easier. You know, I will say I also use my phone, Subway, cafes. I don't touch the card anymore. I don't need it. However, I do worry. How secure is that? How can I protect myself? And what is Alloy doing to ensure that the consumer is protected and also that the lender is protected or the financial institution on the other side?
I think the biggest mistake we made in building digital financial services, but largely the kind of system in the last 25 years or whatever, so there was an over-reliance on single sources of data, because that's sort of what we had access to, like one database over here, one public records database over here, one credit bureau over here. There was a major credit bureau hack a few years ago, as you may know. And the way I think about it is like, my social security number is definitely out there. I just don't, it's not sort of a question for me. That's how I operate as a person, but I think we bring that same ethos at Alloy, which is don't rely on one data source, don't rely on two data sources. Not from just a security perspective, but from like I am much more than my social security number at this point. I'm sort of, I mean, hopefully that's true no matter what. But I have a cell phone, I have a social media presence, I have a LinkedIn profile, I have biometric data that I'm using to do things. All of those things are sort of part of my identity, from a financial perspective. And that's sort of the key, I think, to having both a good user experience, but also making sure that things are staying secure, that you're actually interacting with the person you think you're interacting with on the other side. It's part of why this stuff around deepfakes and stuff is getting really scary, because it makes walking that line harder and harder. But it's really important that we keep bringing all the data together. The hard part is, like I said, implementing it, putting it into a layer that is digestible, making it so that it's appropriate to explain this to regulators. There's a whole host of challenges, but I think that's sort of step one, is not an over-reliance on one kind of data or one data source. And now we have new models that are coming out every day, new sources of data that are coming online every day. We actually can do this.
And just to wrap it up, if we could ask a final question of each of you, what is the thing that keeps you up at night? What are you worried most about? If we can start with you, Liza.
Sure. I mean, look, Stash's mission as an investing platform for lower and middle income consumers is really to help them achieve long-term economic security. When you look at the real, sort of like arrows that have been shot into the American consumer over the last 3 or 4 years, they've had a challenging go of it, and I think we're emerging into an era of opportunity for them and some level of optimism. But every night I go to sleep worrying about, like, are we actually going to be able to help these people? Every morning I get up and say, like, are we fulfilling our promise to these customers? And I think you should only be in jobs like this if you worry about those things day and night. And so that is what keeps me up at night.
Mm-hmm. So not inflation or...
No, I mean, look, I think there's been some green shoots on the front of inflation, both coming out of Bureau of Labor Statistics and the Fed, and even the recent numerator study with consumers say they're slightly more optimistic about where we're going on that front. I would love it if inflation got lower and employment stayed high, because in my heart, I'm probably a little bit of a socialist, although I'm an enthusiastic capitalist. But no, I actually worry more about, like, are our consumers getting that security they need from us? What about you, Laura?
Laura, you have our final seconds here.
I worry about fraud. I think about fraud.
Fraud.
We did a report. Over 2/3 of companies lost over $500,000, including small companies where $500,000 really matters.
Topic
and that freaks me out. It's getting worse and worse.
Well, thank you very much.
On that nice note.
It's been a pleasure.
Thank you.
Thank you so much. Thank you.